Welcome to Real Estate Exposed, helping people in San Diego buy, sell, and refinance their biggest investment, delivering you timely truths, exposing important issues, and helping you get into the right home. Here are your hosts, real estate expert Daniel Beer, top-ranked professional by sales volume at one of San Diego's largest brokerages, and his mortgage partner, Todd Pianin, with over $2 billion in funded loans.
All right, everybody, we're going to jump right into the show because this is one of the most important editions of Real Estate Exposed with Dan Beer. That's me and my man here, Todd Pianin, the most trusted voice in home lending, the place we send our friends and family and clients to right here in studio every week. Todd Pianin.
Good morning, Dan. How are you, buddy?
I'm good, but I'm itching to get into the material because there is so much to discuss as the housing market and the outlook a week further into a Trump presidency and you know, already market shakeups and bond market reacting, rates reacting. We're starting to understand, at least for the short to mid-term, what the landscape might look like. For that reason, we're bringing back the home selling workshops that we've done. We haven't done them in about 5 months, but we're doing a post-election special edition November 30th. And we're offering it twice that day at both 12:15 or at 6:30 p.m., so there's a time convenient to you. If you're considering a home sale over the next 12 months or you just simply want to understand the current landscape, this is the workshop of all workshops to attend. It is totally complimentary. There's no cost to it, and it's purely educational. What does...
Plus free lunch. They come for lunch.
Free lunch at the 12:15. Right. But what does the housing environment here locally for you mean in a post-Trump world? We're going to dive in deep, as well as answering a lot of the typical questions we answer, such as what home improvements you should do and shouldn't. Staging, how does that play into your home sale?
Photos.
I mean, there's photos and then there's presentation, right?
Exactly.
So how do you avoid getting what everybody else is getting?
That's like
what do you demand?
That's my favorite part of the presentation, is showing what other agents do compared to what you do. Well, I mean, it's just amazing.
And it's not about
you
using us.
It's not about you.
We'll show you what you should demand from your agent, whoever it may be. You take the information with you. We give you the blueprint to the 5-day blitz, but most importantly, reshaped around a very fast-changing housing environment now that Trump has been confirmed as president-elect.
Can I make one comment that I've seen interesting, Dan, that I don't know if you've noticed this recently or not, but since we've done these home selling seminars and, you don't do, we talk about what, you don't do open houses. You do grand openings. And that's one of the things you'll learn about in the home selling seminars. But one of the funny things I've noticed is as I drive around neighborhoods now in San Diego, open houses are now called grand openings. Have you noticed? You've already changed?
That's great.
The landscape of that. I don't know if you noticed that.
People attended our workshops, taken the information back to whoever they're going to trust with the process, and that's good. That improves the home selling environment for our entire local market. Here's how you get your tickets to the special edition post-election San Diego home selling workshop. There's 2 ways to do it. One is by phone. Here's the phone number, 800-676-2420. You just let us know if you're bringing a guest, and we'll mail out the tickets your way. 800-676-2420. Now, you could also go online by visiting www.sandiegoworkshops.com. Okay, that's sandiegoworkshops.com. How do you use buyer psychology in your favor in order to gain a negotiating advantage? But most importantly, how do you expect a different result than what everybody else gets typically out of the home sale? That's the only way you can expect a non-average result, is by doing something different. And we literally give you the blueprint that we've personally used to sell 192 homes year to date. We hand that over in its entirety. Now, jumping in here, Todd.
Yes, ma'am.
What? You said ma'am or man?
I said ma'am.
Oh, my God. Rates.
Yes.
Rates are at the top of the conversation right now.
Yes.
The bond market has reacted very aggressively the moment Mr. Trump was elected president-elect.
Yes.
There is even talk of bond vigilantes.
Do you even understand what I mean, do we understand why we had this
Absolutely, but I
increase?
think you should explain it in the best detail you can here in the short time we have. What's going on in the bond market and therefore the rate market?
So, I mean, basically what happens in the bond market is you saw rates jump up dramatically for a couple different reasons. One, with the Trump presidency, there's lots of talk of inflation coming back into the marketplace. So if inflation comes into the marketplace, that inflation dictates higher interest rates. The other comment is that you're seeing a lot of the U.S. used to be a safe haven, it still is a safe haven, but a lot of international money would be buying our bonds,
and there's a lot of uncertainty.
A lot of uncertainty. So a lot of people took their money out of bonds, and because the stock market, Wall Street doesn't like uncertainty, doesn't know what he's really going to do. I've spoken on the radio multiple times saying that Trump, the candidate, will be different than Trump, the president. We've already seen a shift in that. I mean, if those of you who watched the 60 Minutes interview last week,
unbelievably
calm, cool,
humbled.
Yep. Very humbled, totally different person, and I said the Trump presidency, right? I know.
But I was very impressed.
Yeah, Trump presidency will be different than a Trump candidate. If this week we've actually seen bonds starting to come back, you're seeing interest rates starting to dip back down. I've called for end of fourth quarter, beginning of first quarter, we'll see another drop in interest rates because we are a global environment right now. But that's really what's going on. A lot of uncertainty.
So essentially, what you're saying is you believe that as the world gets accustomed to Trump,
yep,
there will be increased confidence in our markets again.
Yes.
Internationally.
Yes.
Which will bring money back into our bond market, which will drop the 10-year yield, which are interest rates that our consumers on their home purchases, that's what it's all tied to.
Correct.
So you actually see now. Do you see rates going back to what they were, or just simply improve from today?
I think we'll see. I think we may see 30-year money breach back into the threes. But I mean, what I also think that one of the things that Dan, you and I have been doing business together for almost 10 years, and a lot of products that I sold to your clients in the past were 7-year fixed, 10-year fixed products, longer, short-term arms they're called, that are fixed for a set period of time. I see over the next 12 to 24 months, I see a big shift to that type of product. I see that we're all used to a 30-year fixed. We all like that 3 number in our head, and to keep that 3 number in our head, you have to switch products. You have to
interesting. So you think psychologically they'll be chasing the 3% interest rate, which will basically mean that they're going to put themselves into 5, 7, or 10-year money.
I like 7 and 10. 5 to me is too short of a time period.
But in any case, you think that people will shift toward that direction because they're chasing the 3%,
Correct.
The 3-point-something percent
and you can
interest
still
rate.
Qualify for as much as you could qualify on. It's like a 30-year rate. And like we've talked about previously on the show, people are going to stay in their homes for shorter periods of time. We've seen the graphs, we've seen the data. Most people stayed in their homes for a much longer period of times, and we talked about that, and we'll talk about that again at the home selling seminars, and we'll show the graph, and we'll show everybody what's going on.
And we'll have a lot more clarity around what's going on. We feel like we have so much more clarity today than we did even a week ago.
Correct.
And by the time we get to the workshops, again, it's November 30th, we'll be even more clear, and we're going to dedicate time to what does the housing market here locally look like in a post-Trump world.
And really, we'll open it up to a lot more Q&A. I think there's a lot of people who are going to have a lot more questions at this home selling seminar, and I think at probably even the first quarter of our home selling seminars, because we're going to do some next year as well. Correct? Hopefully.
Absolutely.
But I mean, this is going to be an important one on November 30th. I strongly suggest you get tickets now because tickets are filling up. The phone number to call to get a ticket is 800-676-2420. 800-676-2420, or just go to www.sandiegoworkshops.com and sign up for it right there. I really think that this is a unbelievable opportunity for you to kind of get your questions answered. So
coming up out of the break, we're going to talk more about how inflation will play in to the housing market, the interest rate market, and affect your home buying, selling, and investing. This is one of the most important shows you'll tune into if you're worried about your money. You're listening to Real Estate Exposed with Dan Beer, Todd Pianin. welcome back. We're listening to Real Estate Exposed, or I should say you're listening to Real Estate Exposed. I'm Dan Beer, #1 Keller Williams agent by sides and by volume in all San Diego County.
Are you #1 Keller Williams agent or #1 agent in the county?
Keller Williams in the county. By sides and volume.
I thought you were #1 agent in total. I thought you were #1 agent in the county.
There's on a team level, there's a couple of teams that do just sort of, far fewer transactions, but
bigger
very
deal,
big dollar
deals
along the coast. You have a couple of other teams that do. We'll see where we end up this year. Actually, we'll see. Actually, I understand what you're saying now because I haven't updated myself on broker metrics, which did show that. Anyway, this isn't about me. I only was sharing that with you because the information that I share with you as far as trying to better your home selling process, your home purchase process, it's coming from a darn good place.
It's a really good place.
And Todd Pianin, $1 billion plus in funded loans. So we're going to have a discussion right now about what a Trump presidency means for the housing market. And you have what I believe to be professional opinion behind it. So, Todd, we left off talking about inflation. And there's a lot of inflationary conversation as there's a lot of protectionist conversation, and rhetoric coming out of the Trump camp. There's talk about taxing more heavily, U.S.-owned imports that are coming back into the country because we've outsourced the labor, so he wants to tax that. He's talking about a $500 billion to
$1 trillion.
$1 trillion, depending on what you read and where, dollar spending plan here domestically on infrastructure, roads, bridges, and other crumbling infrastructure. That
airports.
They're horrific. I mean, they're absolutely horrific. If you travel internationally, we are so behind. So there's no doubt we need those things. But it's very interesting to see the conservative, small government, small spending, talking about $500 billion to $1 trillion domestic spending plan. And that adds to the inflationary just environment that we're seeing, which allows rates to continue to creep up as they have.
Right. Totally. I mean, it's inflationary concerns, I think, are at all-time high. I think that people are worried, what does that mean for me? What does that mean for my dollars? His rent's going to continue to skyrocket. And I think the answer to those questions is a real simple one. It's yes. I mean, rents are going to go up even further. We've seen a 15% increase in rents year over year here in San Diego County, and we'll probably see another major increase in rents in San Diego County. So one of the things I don't really understand, and maybe Dan, you can help me out with this, but why aren't people buying more? Because you can actually, even in today's marketplace, you can actually spend less on a monthly basis, plus get the tax advantage, plus build equity and ownership, actually get a return on your investment if you buy. And if you buy now versus buying after there's a Trump presidency, when this inflationary concern comes in, you're actually going to get that little bump just inflation. So if I buy a house for $500,000 today and we track at, let's call it a 5% inflationary number, and we've been tracking at a deflationary number for the last couple of years, 5%, $500,000 today is actually $525,000 next year.
And some of this is fairly complex, by the way. You're listening to Todd Pianin, Daniel Beer, Real Estate Exposed. If you want any kind of personal consultation, conversation around these very topics, how they're going to affect you, call 800-676-2420. 800-676-2420. Be happy to have that conversation with you. But that's right, Todd. And I don't think a lot of people understand why rents are destined to rise even more than they already have.
Right.
Or excuse me, let me rephrase that. Why rents are destined to rise even more than they already have as rates rise. And if you think about it, when rates are really low as they've been, well, if you're a landlord and you're raising rents and raising rents and raising rents, eventually you get to a tipping point where your tenant, a certain percentage of your tenants, some of them will just stubbornly rent for the rest of their lives, but a certain percentage of your tenants will suddenly say, you know what? The disparity between rent and what I what I could buy is too great. So interest rates are low enough. My rent is too high. I'm going to go purchase a home. Now, as rates rise and that ability to borrow decreases from the tenant, you can actually force that same tenant into higher rates without turning them into a buyer.
Correct.
So higher interest rates will lead to higher rents, and we all know that we already have very high rents. Interestingly enough, though, we've covered on the show, our rents, as high as they are, actually have room to run up as you compare them to other coastal California markets. So if you're renting,
big time,
this is something you have to pay attention to and get a personalized analysis put together.
So can I ask a question on that, Dan? Yeah. So do your buyer specialists, if I walk in and have a meeting with your buyer specialists, which are, you got Brian, you got Perry, you got Josh, fantastic buyer specialists. Do they sit down with you and they say, they do like a rent versus buy, like I'm paying $4,000 a month or $3,000 a month in rent. What does that translate to in buying?
Sure, it's
because you guys, because your guys do consultations. It's not just like, hey, meet Brian. He's going to show you some homes and open some doors. You guys do things a little differently.
Well, what most people get is door openers.
Right.
Most people do their own home search online. They only see what's online. They only see what's on Open House. They only see what hits Zillow.
Right.
And they're always chasing the same home that the next guy's chasing.
Right.
Then they call an agent. They get the door opened. Right. So the only way you can actually, in today's very, very transparent, internet-driven world.
It's not a commercial for the Beer Home Team. This is really just, one of the questions. I just want to know if
there's other people that do it. It's not just us. But if you're actually looking to purchase a home, find one of these people.
Right.
Find one of these people that will actually drive greater value. What does that mean when you're buying? When you're buying, it means you're not just looking at the next thing that popped up online. Right. Everyone else sees that. Literally, all the other buyers see that too.
Right.
That's why you shouldn't be surprised when there's multiple offers on any desirable property and you're always late to it. Rather, a true buyer specialist, what they do is sit down, have a consultation, figure out an actual blueprint for exactly what you want, really understand you, understand what's important, why it's important, understand what are the differences between the things you absolutely need and those that you want. And then they go find it.
But they do a rent versus buy analysis?
Some people aren't even considering rent, so they don't.
Right.
Some people, because they're in that world and they're a first-time buyer and they're a bit nervous, absolutely, that would be part of the conversation. And by the way, some people have unbelievably cheap rent because they have a bozo landlord that doesn't realize that rents are up since 1985. And so the answer might be stay put.
Exactly.
All right, so you're just going to get a genuine answer. But for the most part, it with rates as low as they are, it just doesn't pencil out to rent. And the biggest obstacle is most people just don't realize how low of a down payment you can have to buy.
Correct.
So in any case, back to what's going on in the housing market here. You have this inflationary element, so you would think that prices will rise as that happens. But at the same time, you have rates
rising as well.
Which typically means prices drop. So those two elements are fighting each other.
But you also have income rising in an inflationary environment too.
Absolutely. And then you have what we haven't even gotten to discussing yet, which we'll jump into deeply at the home selling workshops, which is deregulation, financial deregulation, which we'll touch on in the next segment. But when you have loosening lending standards and the inflationary environment that's being built, in the infrastructure spending that's going to happen. We'll figure out to what degree, but it will happen to some degree.
Right.
And all of this, you put that together, and then the story of how much confidence the international markets have in our bonds, which today is a little decreased based on the uncertainty of what does Trump mean to the world. Right. But things have a way of starting to, people get used to things. And so as that all comes into play, it will be very interesting to see. I have a prediction. You have one. We'll touch on it in the next segment, as well as financial deregulation and loosening lending standards. What will it look like, and how can we make sure it doesn't look like 2008, 2009? And if you want tickets to the home selling workshop, where we really will pick this all apart and make sure you're clear on all of it, phone number for your free tickets, it's coming up November 30th, is 800-676-2420. That's 800-676-2420. You can also visit SanDiegoWorkshops.com. You're listening to Daniel Beer and Todd Pianin. This is Real Estate Exposed on News Radio 600 Kogo. That's coming up next. All right, so you're listening to Real Estate Exposed here. Beautiful Sunday morning in San Diego. You're with Dan Beer. Number one Keller Williams team in San Diego County, both by sides and volume. And Mr. Todd Buchanan, over $1 billion in funded loans. And I'd say that qualifies as professional opinion. That's why we trust you to our friends, clients, and family. So let's jump into it, Todd. There's a lot of talk out of the Trump camp about financial deregulation, specifically the Dodd-Frank, attacking it, tearing it down, making it smaller, doing away with it entirely. How much of it is all possible? What does Dodd-Frank even do? What does it mean? Why does the listener care? Because, by the way, you do care. You just might not know you care yet. This directly impacts the entire lending environment, which, if you remember, the last time it was massively impacted by full deregulation, it seemed, we ended up with a massive issue. So, Todd, what does it mean? Where are we going? And how do we make sure we don't end up with a huge issue?
So, well, I can't tell you we're not going to end up with a huge issue. Let's talk about some broad. Take a paintbrush and do some broad things. One of the things it's probably going to do if he dismantles or tears apart Dodd-Frank, one of the major things that's in Dodd-Frank is what's called stress tests on banks. And so there's been a lot of banking mergers that have taken place. And the reason for the mergers is because you have to have a certain deposit base to be able to lend out money. So in the past, prior to Dodd-Frank, you had even conservative banks like Chase. Jamie Dimon's notoriously known as one of the most conservative CEOs of a bank in the country. They would lend out 15 times their deposit base. So basically, if they had let's just make it simple. If they had $1 million in deposits, they could lend out $15 million in loans. So
you actually go 15 times.
That Chase was conservative. Other banks like Wachovia, Washington Mutual, IndyMac, Countrywide were doing 25 or 30 times.
Oh, wow, because 15 sounded aggressive, but
Correct.
I guess it was actually conservative.
Correct.
And so that's what you ended up with. We all know where that went.
Right. So I don't know the exact threshold now. It's probably 2 or 3 times deposit base, basically, or deposit base. So that's why you've seen a lot of banks merge and take over the deposits. If they deregulate it, they're talking about allowing banks to be able to leverage themselves 10x as a minimum of what their deposit base is. So that would slow down mergers. So that would free up more capital to lend, though, which would help small businesses. It would also help the residential market. It would help the commercial market. It would push more products out to the marketplace. So that's one of the things. Other thing they're talking about is getting rid of qualified mortgages, which what does that mean? Well, qualified mortgages means that, like I've always said on this show and Dan loves to talk about, is that I always talk about that we have a really strong vintage of buyers right now. We have the best vintage we've ever seen. We've seen buyers that actually have the down payment, have good credit, have income, that kind of stuff. And qualified mortgages mean you don't have some of those crazy products. Like remember those NEGAM loans that we had, or lending at a very high interest rate to low FICO score buyers, the whole subprime market, that type of stuff. Those aren't considered qualified mortgages. So we could see with the Trump presidency and deregulation, we could actually see some of those products come back into the marketplace. And there's a need for those products in the marketplace, to be honest with you. I think if they're done smartly, it could be good for the marketplace. It'll be good for the purchase market.
But eventually what ends up happening, or at least what history has told us, is there probably will be some smart investments made, some smart loans made. Mm-hmm. What we would call looser loans today,
yes.
But still they'd actually be smart investments.
Yes.
But then that will be pushed a little bit further. And then a little bit further.
Yes.
You
go all the way.
Or is this just me falling into some sort of slippery slope fallacy?
No, I think you're on the right track, Dan. I don't mean it in a bad way. I think it's a slippery slope that once you open the door, you could start seeing some things happen. But I've also seen there's been a rash of underserved people in the community. But what I mean by that is you have a lot of self-employed borrowers who can't get loans to increase their business, for one. Okay, they can't buy homes because they're self-employed, because of our tax laws. They don't show a lot of income on their tax returns, but these people pay their bills on time. You can't do a qualified mortgage for somebody who can't prove their income. But they have their income, they show deposits in their bank account, they've got good FICO scores, they have a good down payment, but it's illegal to do those type of borrowers loans. I think there's a massive hole in the marketplace for that. I think that we've seen, I know that your team has done a lot of transactional business. You've done, a whole range of price ranges, but I think you and I would agree, and we've stated the statistics, that a lot of the super jumbo market has been affected by this regulation, because a lot of people who buy in that marketplace are people who don't necessarily they're very sophisticated on their tax returns, and they don't show a lot of income, so they can't qualify to purchase those properties. So I see that we're going to rotate into, I think, more of a jumbo marketplace, and with this deregulation, it could switch. We could see that market start to thrive again.
So when I start hearing that, and by the way, you're listening to Dan Beer, Todd Pianin, Real Estate Exposed. If you want to call in or speak to either of us, the number is 800-676-2420. So when I'm hearing looser lending,
yes,
and granted, some of it may be smart. Let's go back to what we were saying 2 weeks ago, 3 weeks ago, prior to the election. We're talking about, we really see there's a shifting market that's coming. It's time in the natural cycle of the world. It is just we're seeing already a very very softening. Quickly softening luxury inland market in San Diego County, where we're anticipating that to trickle out to the rest of the market and eventually out to the coast over the course of the next 6 to 12 months. It'll basically be the story of 2017, we were saying. Mm-hmm. Well, now what I'm seeing and when I'm hearing looser lending is that what we were telling people that, hey, don't worry. Yes, a shift is coming, but it's a normal shift. It's a natural shift. It'll be, I was thinking anywhere from 5 to 10%. Mm-hmm. Well, I wouldn't it be logical that we'll probably now have more default in the market? Once the shift really starts to take shape, and maybe it'll actually be extended. Maybe instead of it being 2017, it's 2018. But when it eventually comes, and make no mistake about it, it will come because markets aren't done having cycles. We
can live and die by cycles. I mean, you can set your clock. You can set your clock to it.
So when it happens, would it be logical to say that we'll probably see a steeper drop than we previously were going to see, because there just simply will be more default in the marketplace based on looser lending? And maybe it won't be the looser lending of today, tomorrow, or the next day, but what's going to be happening 2 years from now? What's going to be happening 3 years from now?
I think your prediction is valid. I think that now with a Trump presidency, and if deregulation comes into play, Dan, I think that you're going to see looser lending guidelines. Your prediction is going to be pushed out further. If you just go off of what Fannie Mae and Freddie Mac are predicting for the purchase market, it's increasing. It's going to be increasing year over year over the next 3 years at a 20% clip minimum. I mean, you're talking, numbers of 1.1 trillion to 1.5 trillion to 1.6 trillion. But I do believe that's got to do with the idea that Trump will deregulate and have loosening credit guidelines. And what happens in that environment is that people overextend themselves and do things because they're feeling good. They got more money in their pocket, but one little trip, and all of a sudden they can't afford to make their mortgage payments. So when we were talking about maybe a normal correction in the marketplace in 12 months, 18 months, 2 years from now, I think that you're correct. We may see I don't want to call it a hard correction at some point, but we could see a pretty hard correction. And one of the things I've talked about on this show is that you've got a lot of big banks that have loaned a lot of money at a very low interest rates, and if inflation comes in and now you can start getting 2 or 3% on money markets for your money that's in the bank, how do these big banks keep making money? The only way they keep making money is they loosen up their lending guidelines.
Well, there you go.
So, I mean, and then we could come into another financial crisis again.
If these are the questions that you have and you're looking for clear answers, you want to join us at the home selling workshops that is coming up. It's a post-election special edition. Tickets are free. The number is 800-676-2420. Again, that's 800-676-2420. Come and learn how you can net upwards of $62,000 more in the sale of your home, how you can dependably have your home sold within 5 days of going on the market. Get the entire blueprint to the trademarked 5-day Blitz program handed to you and get all these post-election questions answered. Tickets are free. Visit SanDiegoWorkshops.com or call 800-676-2420. You're listening to Real Estate Exposed with Dan Beer and Todd Pianin. We have more for you coming up next. All right, welcome to segment number 4, Real Estate Exposed with Daniel Beer, Todd Pianin. You're listening to Real Estate Exposed, and we're going to talk home improvements. It's often the hot button topic for anybody looking to sell their home over the course of the next 12 months. What should I do with my home? What shouldn't I do with my home? Where do I invest money? Where don't I? Where is it? Where are the smartest home improvements made for the greatest return?
So I have like a whole bunch of questions, Dan, to ask you about this. So like, there's things in my house that I hate. Paint color, wallpaper. I mean, just out of pure, just like thinking as the average person, like if I'm going to call the Beer Home team up to come list my house, I mean, would you, am I thinking the right way? I mean, conceptually, things that I don't like, should I make changes, things that bother me, or are there like conceptually like big wins, like, changing refrigerators, for the sake of argument, changing appliances, maybe changing a faucet here that would give me more value than me repainting my house, or I guess that's where
I think what you're asking is, do you go by your opinion?
Correct.
Or are there established professional investments into the home that can be made that will trump in one that you would make on your own,
right,
based on a non-professional opinion?
Right.
Even if your gut's telling you there's certain things you should do, sometimes it's actually something else.
Because I've heard you say to clients that like I want to put a pool in, and then the comment you make is it's going to cost you $100,000 to put a pool in, and it'll probably give you about $30,000 in value.
Yeah, and that's, a $100,000 pool is a very nice pool. It's definitely a luxury pool, but that's sometimes the pool you need to put in for, let's say, a $1.5 million house.
Right.
A pool can come in $60,000 or $70,000, but you're thinking about it the right way. When you're looking to make an improvement and you're going to sell your home. Now, sometimes there's those of you that are going to sell. You're going to sell your home literally tomorrow. You're going to just make the improvement, then sell the home. There's those of you that you're going to make the improvement and sell the home a year from now.
Right.
So you look at those a little bit differently, because when you're going to get personal enjoyment out of it, you can absolutely factor that in. But from a pure economic, perspective, when you're just looking at ROI, what should you do and shouldn't you do that's actually going to get you multiple dollars back? Now, this is a topic we dive deep into at the home selling workshops. At the home selling workshops, we answer a lot of personal questions from the audience, but we also give you all of the professional opinion, all of the professional, actual studied result in what has actually worked, what hasn't. Here's what I could say. What you are typically, on the short time we have, because we have 3 minutes here.
Right.
Before you do anything, before you touch anything in the house, have your agent to the home. If you're working with a professional agent, you will get much better advice than if you went at it on your own. Now, how do you know you're working with a professional agent? There's a very simple way. Make sure they sell at least 50 homes a year. It's very simple. 50 homes a year, that's not even one home a week. But let's say they go on vacation a couple weeks a year. If your agent isn't successful once a week, I'm not sure that there's enough. Look, they might be a great guy, great lady, but there isn't enough track record there for you to for you to go write a check and make home improvements based on their opinion. You at least need someone doing 50 deals a year. Now, assuming you have that,
right,
get their opinion before you touch the house. That your favorite paint color may not be what the market wants. What you're looking for is the broadest and widest reception to the colors you bring into the house, what you put money into, and you always want to make sure it's something visible. So what do I mean by that? I mean, obvious deferred maintenance, you want to go there. Okay, when there's a broken lamp or chipped tile, when there's something clearly broken, something that's wrong, that the buyer's, carpet that's soiled, something like that the buyer is going to walk into the house and have an adverse reaction to, get that handled. Because psychologically, that is going to affect the way they receive the whole entire rest of the property. Now, on the reverse side of that, let's say there's something let's say funds are limited and there's something doesn't quite work, but it's not going to be experienced in the home showing or in the grand opening process, then that's something you'll address through disclosure, but that you don't necessarily have to do up front because it doesn't affect the mood of the buyer. This is what we look at in great detail. What home improvements should you do? Which ones shouldn't you, in order to have a great return on investment and get the most dollars for your home sale? That's what we look at the home selling workshop. And of course, we have a special post-election edition, which covers even more material specific to what does this changing landscape look like now that we have President-elect Trump. The number for your free tickets is 800-676-2420. That's 800-676-2420, or visit SanDiegoWorkshops.com.
It's been a great Sunday with you. Thank you for joining us again on Real Estate Exposed. We hope you get to go to the workshops. We are looking forward to seeing you at the workshops. And I am Todd Pianin from Home Street Bank. And we are a member of the FDIC, Equal Housing Lender, NMLS ID number 304014. Enjoy your Sunday.
Thank you all on behalf of the entire Beer Home team.